So in today's session, we are going to discuss about a topic from financial reporting. So this paper, financial reporting, mainly deals with accounting standards, the applicability of it, and what has to be included into your financial statements, how these statements are supposed to be framed, and basically what each and every accounting standard deals with, and the intricate details, the rules, the regulations pertaining to each and every accounting standards is discussed in detail in this chapter. So coming to our video today, so we are going to particularly discuss about the introduction, the evolution of accounting standards, and the meaning, the scope, the nature, and whom all does it apply to. So accounting standard is nothing but a written statement which is issued from time to time by institutions which were set exclusively for the accounting purpose. For example, ICAI, which is kind of the governing body in India, and ASB, which was instituted by ISAI. ASB is nothing but Accounting Standards Board of India, which kind of formulates and issues accounting standards from time to time. So let's quickly look into why do we need accounting standards. So we have a lot of companies in India, not just in India, across the globe, there are millions of companies. So if it's really left to their choice as to what they want to include in their financial statement, if they really don't have a common base on which they can frame, they can prepare these accounting statements, then it's just going to be a big problem, because if it's left to their choice, they are going to do it with their they're going to adopt something which is going to be beneficial for them, which is going to give them some benefits, and they'll also take into account the interest, the need of their well-wishers, and try and tweak a little bit into their financial statements and try to make the financial statements according to their well-being. So all this commotion will happen just because there is no a regulatory standard based on which the financial statements can be framed. This is where ICAI came into the picture. So they instituted a separate board called ASB, Accounting Standard Board of India, who formulated and who issued accounting standards. ICAI also made it mandatory for these companies to adapt, to take up these accounting standards and to execute, to implement them in their financial statements. And it also made it mandatory for them to comply with whatever the rules that's been imposed, that's been levied by the ASB. So moving on to a little to a contemporary scenario maybe. With the advent of globalization and liberalization, these multinational corporations, conglomerates, globally renowned companies wanted to know the intricate, the insights of how Indian companies were functioning, which we can study from their financial statements. So when these people wanted to look into the Indian company's financial record, they were not able to comprehend as to what has been written precisely, because their standard was different from what we were following in India. So they were not able to compare the financial statements with our financial statements. So now this is where IFRS, which is the International Financial Reporting Standards, they came into picture. So they again published certain international standards which was applicable for all the companies at an international platform. So every company which is going global, so they had to follow international standards into their financial report, which made it more feasible for them when they had to compare themselves with the local company's financial report. Once IFRS had set their accounting standards, the next thing that the Indian board did was to combine what they had the existing principles that they had, which is known as GAAP, generally accepted accounting principles. They took GAAP and they took IFRS, the international standards which are followed by the companies globally, and they wanted to merge it because there were just too much of clashes, there were too many differences and implications that's what happening. Hence, they wanted to bring both of these together, so they merged it and they brought up something new called as Ind AS, which is currently prevailing in India. So when we talk about GAAP, we had a total of 32 principles. And when we talk about Ind AS, which is a combination of GAAP and IFRS, we are currently at 39. The total number is at 39. This number actually fluctuates from now and then. It was initially at 41, so they had to withdraw a couple of principles, they had to withdraw a couple of standards because of the problems that they had with it, because of the loopholes that was there in it. So the number is currently at 39. So how distinctive this new standard, this new Ind AS is from GAAP? There's actually quite a lot of differences between what was already existing and what is currently existing. That is between GAAP and Ind AS. For example, GAAP, according to GAAP, companies were actually allowed to take into account transactions pertaining to extraordinary events. So there are certain events which doesn't happen during the normal course of work, during the normal functioning of a company. So that's what is known as extraordinary event. So according to GAAP, companies were allowed to make statements pertaining to extraordinary events, whereas when it comes to Ind AS, they very specifically told that whatever a company does, it's going to be ordinary. So there is no such scenario where an extraordinary event happens. Whatever they do, it's going to be an ordinary business. Hence, there is no extraordinary transaction, there's no statement pertaining to extraordinary event. So the entire concept of extraordinary event was ruled out when it came to Ind AS. So these are the small changes that were made. These were small amendments that were made to the Ind AS. Okay, so let's come back to the need, the necessity as to why accounting standards are to be implemented into your financial statement. So the first one is, your financial statement is the ultimate means of communication through which your stakeholders, not just your shareholders, not just your board members or your debenture holders, the government, the general public, the taxpayers, they also get to know what's actually happening in your company and how will you communicate it through your financial statement. Hence, you need to apply all the accounting standards that's applicable for you and execute the same in your financial statement. Moving on to the next one, a common base based on which your accounting policies can be framed. So each and every company will have their own set of vision and mission, but when it comes to their obligation towards financial statement, everybody is legally bound to prepare and present financial statement. No matter how big or small the company is, they have to do it. This is the basic obligation that they have. Hence, they need a common ground, a common base on which they can build their policies, they can frame their regulations pertaining to their accounting standard. The next one is to improve the quality of financial standard. So these companies by default, when they apply all these accounting standards into their financial reporting, into while they frame their financial statements, by default they are doing everything in a structured manner. So nothing can go wrong when they are applying accounting standard. There is nothing extra that they need to do in order to make it more, probably in a more righteous way. They need not do anything extra, because as and when they apply accounting standard pertaining to each of these statements, by default, they are getting it all done in a very systematic, structured manner. So the next is, when the law fails to ask for a particular disclosure, that's when the accounting standard comes into picture. So here, when a particular law, a particular company, when they have a certain transaction and they really don't want to disclose it in their financial statement, just because they might argue saying that according to this law, I don't have to do this, or this law doesn't make me, or this law doesn't compel me to furnish certain details about my company. They can't say that just because of the accounting standard. When a particular accounting standard is asking you to furnish certain details in your company, then that shall be the final say. The next one is to attract FDIs. So with foreign direct investments, if a particular company is very keen about any collaborations with the foreign companies, or they are seeking investments from foreign grounds, then they have to follow accounting standards into their financial statement, because that is the only evidence which the foreign companies or anyone from the foreign grounds has. It's more like a goodwill for the company. So once it says that it's been following accounting standards into their financial statement, it goes without saying how sound their business is or how righteous they have been in their business process. So which acts as a goodwill to them, and it will motivate the foreign people to invest more in their company. Now, the last one is to reduce creative accounting. So, there can be no window dressing when it comes to accounting standards. When a company is bound, when it comes within the ambit of accounting standards, they need to follow each and every accounting standards that's applicable to them. So, there is no talk of flowering the accounting statements or bringing in the accounting statements which is favorable to them and omitting the ones which is not favorable to them. So they really can't tweak with their accounting statements. It has to be according to the accounting standard. Now let's quickly move into the nature and scope of accounting standard. So the first one is each and every accounting standard has its own principles, rules, regulations, which has been very clearly, which has been very precisely put up by the ICAI. Second one is local regulation. So when it comes to places which have their own set of customs, like Pondicherry, it's a union territory. A lot of our laws doesn't actually apply to them. So in times of such situations, accounting standards will not be applicable for them when it collides with any one of their local regulations. Next is the legal requirement. Again, law will always prevail over accounting standard. When a particular accounting standard is asking you to furnish something and the law forbids you from doing it, then you'll have to follow what the law says. So the law always have a heads up when it comes to accounting standards. Next, disclosure or not qualifications. Just because you have furnished certain details in your accounting standard, it doesn't mean you can go ahead and claim something that's not for you. It could be a tax leviation or it could be some subsidy. So just because you've furnished certain details in your account, it doesn't mean you're eligible for certain things. So by following accounting standards, you're just disclosing whatever is happening within your company, and it's not a qualification for you to go ahead and take advantage of some of the subsidies that's available. Every accounting standards has its own limitations, so which is why now and then we'll have amendments, we'll have the ASB will come forward and they'll have a press meet where they'll make certain corrections, they'll explain as to how it can be applied. So each and every accounting standard has its own limitation. The more we apply a particular accounting standard into our financial statements, the more doubts and the more loopholes we'll find. So as and when we have doubts, we have implications to it, we'll appeal to the ASB and they'll come forward, they'll analyze what can be done right, or if there's just too many complications associated with one accounting standard, they might even withdraw it. If it's something amendable, then they'll tweak it a little bit, they'll make some changes and they will republish it. Next is, so accounting standard is a statement. There are total of 39 accounting standards. So everything will be put up in a single book kind of a thing. So all of it is available in the websites. There are multiple websites which offers details pertaining to accounting standard, but the one which is very reliable would be from the Ministry of Corporate Affairs, the official website of Ministry of Corporate Affairs, because every now and then, probably every single day, they make changes to it as and when it occurs in the accounting standard, so it's more reliable. And so if we see the accounting standards, the next point will be more understandable, because everything will be given in bold and some of it will be given in italic. Just because it's given in italic, it doesn't mean it's of more importance. Every single line of it is important. It's just to differentiate between one point to the other. They would have done this bold and italics, but other than that, there is no any particular meaning to it. And the next one is, if any, which we have already discussed earlier, if any company or any auditing firm, anybody who have any doubts with regard to any of the accounting standard, they can always come forward, they can ask for clarifications from the ASB, and in turn ASB also will set up an analysis group. They'll do everything from their part just to make sure that the accounting standard reaches the people with a clear cut explanation. Now moving on to the next one, the factors that needs to be considered while formulating an accounting standard. So the first thing that we need to consider is what kind of accounting standards all the other major countries are following, all the big economies in the world like US, UK, Japan, who have a really good say when it comes to a global economy. So all these accounting standards which has been locally followed by all these countries should be taken into account. And the second one is applicable laws in India. Every single law that's pertaining to companies and pertaining to accounts, so everything needs to be taken into consideration before an accounting standard is formed. And the third one is the customs and usages. We all know how diverse our India is, so many culture, so many customs, norms, we have a lot of beliefs. So all that also needs to be taken into account. And moving to the last one, environment is dynamic in nature. From one day, every single day it keeps changing, so we need to take into account the business environment that's currently prevailing in India, and we need to modify accounting standards according to the prevalence of the environment that's currently there. Next, we'll quickly see what kind of benefits by applying accounting standards the companies have. When we talk about benefits, the government is benefited out of it, the general public is benefited out of it, the company themselves are benefited out of it. But here we'll just look a wholesome view of how beneficial it is to adopt accounting standards into your financial statement. So first one is to improve the credibility and reliability of the financial statement. So any outsider of a company, if he wants to know how sound the business is, how will he know? By looking at the financial statement, how good the business is running, it will be reflected in the financial statement. So only when a financial statement is properly drafted, only when they have applied all the accounting standards into the financial statement, it will be reliable. And credibility of it, any investors who wants to invest in the business, how will they do it? Again, they look into the financial statement, and for it to be very reliable and credible, the companies have to adopt accounting standards. So next is, it's beneficial to the accountants and auditors as well, because there is nothing from their part that they have to do. They just have to blindly follow whatever is being given in the accounting standard and implement the same in their financial reporting. So there is nothing extra that they have to do, or they need not put their mind into as to how to frame it or what has to bring in, what not to be brought in. So they need not do all those thinking, because everything has already been set, everything has already been prepped by these accounting standards. Next, it determines the managerial accountability. So management of a particular company, they are the ultimate governing body to that company. They'll decide when and what has to be done when it comes to the functioning of a business. So they'll know the accountability that they have, the responsibility that they have when it comes to accounting. So that is determined only when accounting standard is implemented in the financial statements. And the last one is bringing reforms in accounting theory and practice. So the more we apply accounting standards into the business, the more reformations, the more revolutionary things might happen. We might come to know about certain loopholes that exist in the company, that exist in the industry. So all these will be brought out only when every single company applies accounting standard into their financial statement. So now we'll quickly look into whom all this accounting standard is applicable for. So the smallest of small business, probably a petty shop people who'll do accounting on everyday basis. So it's not real, you can't expect them to be following accounting standards, right? So whom does it really apply for? So this is where the beauty of accounting standard comes in. In nowhere, in none of the sentences in accounting standard, they would have mentioned this terminology: company, partnership firm, organization, or anything of that sort. None of these terminologies is mentioned in accounting standards in the written statement. Instead, they have used the term enterprise. So within this enterprise, within this term, all the possible companies, be it whatever institutions that we are talking about, be it partnership firms, everything comes under the bracket of enterprise. Now this enterprise is split into three levels: level 1, level 2 and level 3. Let's quickly see what all falls under level 1. There are certain basic criteria based on which the enterprises are split into these levels. So we'll quickly see what the criteria is also. So when we talk about level 1, the first thing, any enterprise which is listed or is in the process of listing itself. So when I say listing, it means they have gone public. They should have either gone public or they should have at least registered themselves with either one of the stock exchanges in India, be it recognized or unrecognized. So they need to be registered with these stock exchanges. So the first one is all the enterprises which are listed or which are in the process of listing themselves with any one of the stock exchanges in India. So they come under level 1. Next one, all the banking, financial institutions and all the insurance companies, they all fall under the level 1. So that's second point. Moving on to the third one, based on the enterprise's turnover. If their turnover in the immediate preceding year is going to be more than 50 crores or it's equal to 50 crores, again they'll fall under level 1. So based on turnover which is equal to or more than 50 crores. Moving to the next one, according to their borrowings. If an enterprise has borrowed a sum of more than 10 crores, more than or equal to 10 crores, if their borrowings is amounting to more than or equal to 10 crores, again they are going to fall under level 1. So these are the criteria, these are the bases on which certain enterprises are categorized under level 1. So moving on to level 2. So any enterprise which is going to have a turnover of less than 50 crores in the immediate preceding year, then that's going to be falling under level 2. And similarly, coming to borrowings, any enterprise which is going to have a borrowings of less than 10 crores, again they'll fall under level 2. So moving on to level 3, level 3 is pretty easy. Any enterprises which doesn't fall under level 1 and level 2 is going to be put under level 3. So these are the people to whom accounting standards is applicable for, and it's their basic obligation to follow each and every accounting standard into their financial statements. So we have so far discussed about the evolution of accounting standard, the need of it, the meaning of accounting standard, and whom does it apply for. And I believe we would have got a really clear idea as to what accounting standard is and everything. So we'll wrap up this session. Thank you.